Hello everyone, welcome back to my channel, welcome back to a brand new video. I hope you guys are all doing great. Yes, I am back with another Forex trading strategy video. I saw that you guys enjoy these videos a lot, so I will keep them coming on a consistent basis. But before we start the video guys, make sure you are subscribed to the channel to not miss out on any future uploads. Make sure to have that notification bell turned on. Also, feel free to join my free signal group, link is down below. And if you want to sign up with the broker I use called EuroTrader, you can do that by using the link down in my video description as well. Also, feel free to check out my website and IG. And if you want to book a one-on-one session with me, make sure to DM me privately on Telegram, okay? That being said, feel free to share and like the video. That will be very much appreciated. And if you have any questions, make sure to drop them in the comment section. I always make sure to reply to every single one of you, okay? So now let me jump straight into the video. But before I go over the strategy guys, I will give you the giveaway details. As I said in the title, I am running a new giveaway. So all you have to do in order to enter and have the chance to win $30, that's going to be the giveaway prize, the giveaway winner. All you need to do is subscribe to the channel, like this video, and then go in my video description, join my free signal group on Telegram, and then you need to invite 2 new people to the free signal group. After you did all these steps, all you have to do is DM me privately on Telegram with the message done, and like that you will be entered in the giveaway. Okay, it's that simple. The winner will be announced on Sunday. Okay guys, so you have time till Sunday to enter the giveaway. Sunday I will do a poll in my free signal group where I will announce the giveaway winner. Okay, that being said, let me just get straight into the strategy. So you guys already know me. You saw that I spent a lot of times on the 15-minute. It's probably my my favorite time frame. But now in today's video, as the title says, I'm going to show you a strategy that will actually help you spend less time in front of the charts, because you know, if you want to trade on the 15-minute, that means you are a day trader, so you have to spend a pretty good amount of time in front of the charts. Okay, if you want to trade a 15, the 5, the 30-minute, that means you are a day trader. Okay, then 5 and 1 minute, that means you are a scalper, and it's that means that you have to spend even more time. Okay, so in today's video, I'm going to show you a very simple Fibonacci trading strategy that starts on the H4, and we will get our entry on the H1. All you have to do for this strategy is to have the Fibonacci, okay, and to have these levels. Okay, so these are my levels. You can color code them whatever you want. You have to have these levels: the 618, 1. This one is not really obligatory, the minus 618, and that's pretty much it. That's all you need. Okay, basically these are the levels that are most important: the 618, the 50, and the minus 61.8. okay, the 76.4 is not that important, but I will still keep it, okay, because I want to show you why. So all you have to do is combine the Fibonacci with market structure. You guys already know what market structure is. If we are in an uptrend, the market is forming higher highs and higher lows, and what we will look for is to catch a buy on the retracement using the Fibonacci, and then a candlestick pattern on the H1, and then we will look for a swing trade using the minus 618 as our take profit. Okay, very simple. Same exact thing for lower highs and lower lows when we are on a downtrend. Okay, same exact concept. If you do not know how to identify market structure, please go ahead and watch the market structure video that I posted on my YouTube channel a few weeks ago. I think it will really help you. It's very simple to read. All you have to do is understand how to read it and then practice it. Okay, just practice, go through the charts and practice market structure, marking the higher highs and higher lows if it's an uptrend, and then the lower highs and lower lows if it's a downtrend. Okay, before I continue with the video guys, if you are looking for a broker to trade Forex with, indices or crypto, I highly recommend EuroTrader. You can sign up with them by clicking the link down in my video description. This is the broker that I am currently using. I had no issues with it. They offer spreads as low as 0 pips. They have different account types, leverage up to 500, and their customer support is amazing. They have credit card withdrawals and deposits. Everything is very professional about them, so that's why I highly recommend you guys to check them out. Okay, so link is down below. Feel free to sign up with Eurotrader. So that being said, let me show you some examples. Okay, so we have this uptrend right here that happened on the H4. Okay, so firstly, we knew that if we look right here, AUD/USD was on a downtrend on the H4. Why? Because it came down, retraced, created a lower high, and then it retraced back and created a lower low. Okay, so this was our range. We are in a downtrend. So that being said, we would have looked for a retracement and probably look for sells. Okay, but here is the main thing. This is the very important thing. So we always mark up our golden zone. Our golden zone is pretty much the zone between 618 and 70 and 50, sorry. And after that, once price gets into this zone, we go on the H1 and we look to see if we have any trading confirmations. And in this situation, we do. Okay, in this situation, we did have trading entries. So we would have entered a sell right after this spin bar. If you want to be aggressive, you can put your stop loss above the 618 and give you a very big risk to reward. And you could have aimed for the 618, which is right here. And this would have gave you a 11.7 R, which is insane. That's very big, okay? But as you see, this trade reversed against you. So this would have hit your stop loss. But this is the next rule that comes in. With this strategy, once you are 1 to 2 in profit, which is right here, not 1 to 1, because this is more of a swing trading strategy that aims for a very big R. When we get at 1 to 2, that's when we move the stop loss at break even and make the trade risk free. In this situation, we would have got stopped out at break even, so we wouldn't have lost anything and we wouldn't have gained anything. Okay, after this, we would have switched on the H4 and followed the market structure again. Okay, so we were right here. After that, we needed to see a break of structure of this lower high, which happened right here, to then say, okay, we are bullish now. Okay, so we had a BOS right here, break of structure, very simple to see. And now we could say, okay, we are bullish. Well, what was the most recent swing low that created this break of structure? Well, it was this one. Okay, so this is our new higher low. This is our higher high. We are now bullish. So that being said, we mark our fib from the higher low to the higher high. Then we mark our golden zone, which is the zone between 50 and 618. And after that, we go on the H1 and look for a entry, look for a buy setup. Okay, so we look for a buy setup. Boom, this was a buy setup. Okay, so price retraced straight into our golden zone, and we had this engulfing, very beautiful. I would have taken. Okay, I would have took this engulfing and I would have placed the stop loss right below this wick. Okay, because we want to be aggressive, we want to have a big risk to reward ratio. Now you might ask, well, where would have your take profit be? Where? Right here, 618, as we discussed. So this would have gave me a 4.3 R, which is very good. But as you can see, we went 1 to 5 and then we came back. Okay, so once we came back into the golden zone, if you are aggressive, this is what you can do. Once price came back into the golden zone, you could have looked for a re-entry. And if I'm being honest with you, after this pin bar right here, I would have got into another buy, because you guys know that I really like using candlestick confirmations, and I would have put the stop loss actually where the first stop loss was as well, which is right here. And then I would have aimed for the same exact target, which, as you can see, has been hit right here after what? After 7 days. Okay, so that's why I said that this is a swing trading strategy and you don't have to spend that much time on the charts, but it's very effective. Okay, so we managed to catch around 10R with these two trades, which is very good in 7 days. That means if you would have risked $100, you would have made 1K. If you would have risked 1K on both trades, you would have made 10K. Okay, that depends on your risk management. That's something that you have to determine. All right, So moving on, let's see if we have some new entries. Okay, so as you can see, guys, I'm using current market structure. I'm not going back of last year to cherry pick my entries and show you that once in 3 years this setup might happen. No, this is literally current market structure. This is from May. Okay, so that's what I mean. Okay, so considering that during this trade, you could have actually looked for more entries. So we already know that this would have been a take profit. So we can delete this buy positions. But maybe we could have got another buy entry. And why? Because as you can see, price came back, formed a new higher low, and then from this higher low, it came back up and formed a new higher high. So we respect market structure and we would have moved our fib accordingly. Okay, so this is the new higher low that created this higher high. Very simple to see. All right. So that being said, we could have looked for some more entries. Okay, even though we would have had those two running that eventually hit the take profit, we could have looked for some new entries. Okay, so let's go on the H1. Of course, guys, as a disclaimer, you will also get stop losses with this strategy. It's not a holy grail. That thing doesn't exist. You will never get a 100% win rate strategy, but it's a profitable strategy. Okay, I can tell you that. If used correctly, this is a profitable strategy. Okay, so price retraced into your zone, and you would have looked for some buy setups. Okay, so most likely I would have entered after this pin bar and price would have hit my stop loss. So minus 1R from 10R, we are now at 9R. And then I would have waited to see if I get something else. This is a very bearish candle. I wouldn't have entered after this one. I would have probably still waited. And then we can see another retracement, boom, right into our zone, and another pin bar would have showed up. Okay, so here I would have lost 1R because I would have entered right after this pin bar with the stop loss underneath it. And as you can see, price went it went 1 to 2. It went 1 to 2, as you can see. So I would have had my stop loss at break even. So ultimately this wouldn't be a loss because, as I said, that rule is very important. This would have been another break even trade, and now I would have waited for the retest and probably get in. Okay, and now where would I get in? Where it's very simple to see right here after this pin bar. This is a very good confirmation for me on the H1. This is exactly where I would have entered my buy. Stop loss right below the wick because, as I said, I am aggressive. And then I would have moved stop loss at break even. And as you can see, the trade never came back and it fully went and smashed the take profit, which is the minus 618. Okay, which is right here. Let me show you. Oh, where are we? Oh, we're in April, sorry. So as you can see, you would have smashed your minus 618 profit, which would have gave you another 10R. Okay, so in total of half of a month, I would say, these two setups could have made you 20R. So depending on how much you risk, if you would have risked 5% per trade, then you would have made 100%. If you would have risked 1% per trade, you would have made 20%. If you would have risked 0.5%, you would have made 10%. Okay, and as you can see, during these setups that played out, we had two trades that didn't run our way, but these two trades were not losses, they were break-even trades. Okay, so that 1 to 2 rule is very important, and I highly recommend you to use it because it will save you a lot of money. But as I said, guys, do not expect this strategy to work always. You will also get stop losses, but if you stick to it accordingly and follow all the rules, as I said, this can be a very simple strategy you can use to swing trade and to not spend that much time on the charts. All right, so yeah, that being said, I really hope you enjoyed this video. If you have any questions, make sure to drop them down below. I'll always check them out and try to clarify everything for you. Do not forget to enter the giveaway. I will announce the winner on Sunday. Also, feel free to check out all the links in my video description and see what interests you. And yeah, guys, this is pretty much it for today's video. I will see you all in the next one. Goodbye.